We witnessed a dramatic increase of outbound investment from China into commercial real estate globally, growing by a remarkable 92% in the first 5 months of 2015 in comparison with the same period in 2014. During this period, Chinese investors bought an incredible $9.4 billion worth of office buildings, shopping malls, development sites, and other commercial properties outside mainland China. If the investment observed so far this year continues at the same rapid pace, then 2015 will be a record-breaking year with total investment of over $22 billion. Increased interest in engaging in the development of sites as opposed to stabilized assets, particularly in the US and Australia, highlights increased confidence amongst the Chinese investment community and their acceptance of higher overseas risks in search of enhanced returns. The US overtook China as the world's biggest market for commercial property investment in 2014 and is still highly appealing to foreign investors. As such, so far this year, we see the US maintaining the #1 spot, having absorbed a remarkable 25% of the outbound investment total thus far in 2015. Australia and the UK were the second and third most popular destinations for Chinese capital, which each attracted nearly 19% of the total outbound investment volume. Australia stood out as a major target for hotel deals, owing to the country's thriving tourism sector, whilst the UK witnessed a series of deals in Greater London, most involving office and retail properties. Despite a sluggish European economy, the commercial property market appeared buoyant, and Chinese investment in the continent shows a clear growth trend. Chinese state-owned enterprises were behind the 7 largest deals of 2015, but are closing fewer but much larger deals than private companies and wealthy individuals. In 2015, state-owned enterprises accounted for about 60% of the total investment volume, but only 25% of the total number of deals. Since China allowed insurance companies to invest up to 30% of their assets in real estate in early 2014, a wave of outbound activity by Chinese insurers was unleashed. We believe this trend will continue to gain strength as insurance firms diversify their portfolios in search of relatively high-yielding alternative assets. The surge of Chinese capital is changing skylines around the world as mainland Chinese build or invest in new office towers, luxury residential skyscrapers, and other commercial projects in cities such as Los Angeles, San Francisco, Toronto, and Melbourne. Looking forward to the rest of 2015, we expect Chinese outbound capital flows to continue at a rapid pace, with a high volume of blockbuster deals very likely.